So let's move into our main topic today, which is really what feels like a disconnect in how the consumer is feeling and what the data is telling us about the economy. And I think that this is really pronounced right now in a way that I haven't felt in a while. Because when you look at a lot of the data that's coming out about how the U.S. economy is doing, it's pretty good, right? Now, there's a few places it's bad. It's bad in inflation, in particular in the energy market and in the food market. Now, those are two places that consumers feel it exceptionally hard, right? We feel that directly on a week-to-week, day-to-day basis. If our food costs are going up, our energy costs are going up, we may have to adjust spending elsewhere. But on the flip side, you've got 3.6% unemployment at near historic lows. You've got increasing wages and still relatively healthy balance sheets for the consumer. You've got a lot of cash on a lot of people's books. But it seems like I get asked every day about the possibility or the likelihood or the what do we do if there's a recession. So, Dan, what's your take on both where we are right now and how are you talking people through how to handle a recession?
Can I use Cardi B as a surrogate for the average American for a moment? Though I would say there's nothing average about her.
Yes, your example of an average American. Go with the Cardi B example.
Right. Yesterday, Cardi B, non-economist, maybe non-average American either, tweeted, "When y'all think they going to announce that we going into a recession?" So it is such a widespread belief that even Cardi B is tweeting to her masses about the potential of a recession. It is on her mind, who is, she's seen wild success over the years, and I'm sure will continue to do so, and engaged her following in a discussion on macroeconomics in the United States.
This is a complete aside to the topic, by the way. Why does she tweet something like that? Does she actually want to have that discussion with followers? Is that just to gin up activity? Like, what is that about?
I was trying to think about this, and I was looking at what time that happened. Like, when is Cardi B thinking about?
Yeah, what time of day is she pondering the economy?
Lunchtime.
Okay, seems reasonable. Checks out.
Right. Not like a 3 a.m. can't sleep at night, worried about the future of workers in the United States.
If I tweeted regularly, that's when I would tweet about the economy. It'd be 3 a.m. when I can't sleep and I'm having weird thoughts.
Well, you and Cardi B would need to operate at different schedules then.
Okay, so it's on a lot of people's minds that there could be a recession or that the likelihood of a recession. You've got Jamie Dimon at J.P. Morgan saying some pretty scary stuff about the economy forward-looking.
Right. He basically said, prepare for a hurricane, if I remember.
Right. Very, very negative sentiment. But the data doesn't necessarily show that. So is what they're saying that we're going to get much worse in terms of the trajectory we're on? In my mind, it's also a little bit self-fulfilling, right? So if you look at what makes up GDP in this country, the largest swath of it is consumption, right? It is people, it is Americans going out and spending their money on goods and services. If you're expecting a recession and you tighten up that spending, which is not an unreasonable thing to do at the individual level, right? If you believe times will be tough, hoarding cash and making yourself more secure on your balance sheet makes sense. If everyone does that, it causes a recession. Like literally by definition, if we all cut back our consumption as Americans because we're expecting things to be bad, they will become bad as a result of that activity. So it is very much a self-fulfilling prophecy if that is in everybody's head.
And talk about trickling down from the top. If you hear these massive companies saying, we're prepared to lay off 10% of our workforce, we're going to be on a hiring freeze, you're going to send everyone into a panic, like not only the people who that would directly impact, but, people are hearing this and saying, all right, well, I better prepare for something similar happening. Let me hold on to my cash. Let me not buy this thing that I was hoping to buy. And you're right. It just spirals into reality if you're preparing mentally for it.
So there's two things that come to mind as I think about that. The first, and I don't want to call this a conspiracy theory, but as companies are struggling to hire, because that's been the story for the last couple of years, is how incredibly tight the labor market is. You've got this quits number, right? The great resignation, whatever we're calling it. All these people, unlike you and me, Dan, that have said, we're leaving. We're going to quit our jobs. We're part of that number. But you've got all of this, and then the companies are basically powerless. Is threatening people that we're going to do a bunch of layoffs, in your head, we're going to take back some of that power? Like, if you make people scared that their job could go away, are they more inclined to stay in the one that they have and be happy about it?
I haven't really thought about it in that way, but I think there's probably a kernel of truth to that.
I mean, that could be some gamesmanship.
What's that song? If you can't be with the one you love the one you're with.
All right. Anyway, that's an aside. So if you're out there and you're thinking about all this stuff, the next question is, well, what should I do? And first of all, as we did in our Nowhere to Hide episode, I think your choices are tough. You're dealing with negative yields in bonds. You're dealing with negative yields in cash. You're dealing with negative yields in the stock market, in the crypto market, right? There's basically one thing you could have bought recently that's gone up, and that's energy, and that's directly linked to the problems that we're talking about. So you're in a difficult decision of where to hide anyway. But the next question is how much is baked in? Because if everybody is talking about the risk of recession, the likelihood of recession, we're worried about it, and we've already seen a sell-off in stocks, I think there's a real question to be asked of how much of that is baked into today's pricing of that negative sentiment.
If we believe the market is very efficient, you'd have to imagine that most of it is priced in. I think over the years, I would beg to argue that the market is not rational and not efficient. So it doesn't mean we're at the bottom or anything like that. But people have been thinking about this for some time. This isn't a new thought. Like, we are in the throes of how people have been thinking about our economy and where was I going with this?
I just put a slide up, Dan. I realize I just distracted you with it.
You did.
I put this up, and we're going to put this on the YouTube channel because I think this is an interesting segment visually. I'm also going to put a link to this slide in the show notes for folks that want to listen to this on audio and still see what we're looking at here. This is from the JP Morgan Guide to the Markets deck, which is something we frequently reference in our practice because it's a great tool. It is just data. It's not their interpretation of any of this data, but they put out a really, really solid slide deck. And the slide I'm looking at is titled Consumer Confidence and the Stock Market. And sentiment right now is very, very negative, as we're noting. On their scale, it's at a 58.4. There's only a handful of times going back to the 70s that it has been that low, if not lower. And in the peaks, when sentiment has been the highest, the trailing, right, the next 12 months S&P 500 stock returns at peak sentiment times is 4.1%. So on average, when everybody is super excited, the S&P 500 delivers about 4% in the next year. Pretty modest. On average, at the troughs, when sentiment bottoms out and people get super duper negative, the next 12 months deliver 24.9% returns. Almost 25%. In many ways, the fact that people are so negative right now is making me more bullish. It really is. Now, I'm a long-term optimist by nature. That is like deep in my DNA, is that I think we're going to figure it out as like a people. I know not everybody feels that or thinks that way, but this to me proves in many respects that the worse people feel, the better the opportunity is. And so for anybody that's out there feeling super doom and gloom about recession chances, etc., this is an encouraging piece of data that I'm putting up on the screen and in the show notes.